Are you eager to dip your toes into the world of crypto investing? You might have some savings tucked away, perhaps you've stumbled upon Bitcoin a few times, and it's piqued your curiosity. Maybe you've even heard the astonishing stories of folks making millions with Dogecoin or the early Bitcoin pioneers who struck gold. Speaking of which, here's a fun tidbit. Had you invested $1,000 in Bitcoin exactly a decade ago, you'd be sitting on a cool $300,000 today. Not too shabby, right? However, if you're new to the crypto investment game, the simplest tasks, like acquiring your first Bitcoin, can seem like a big challenge. And that nagging little voice in the back of your mind keeps whispering, "What if I lose it all?" In this video, we're here to address your concerns, decode the fundamentals of crypto investing, and provide the essential knowledge you need to kickstart your journey as an investor. Stay tuned for the crypto scoop you've been waiting for. Let's dive into the exciting world of crypto investing, breaking it down into easy, digestible steps for beginners. First things first, why invest in crypto? Well, there are several compelling reasons to venture into the world of cryptocurrency. For starters, it's a roller coaster ride of volatility and the promise of substantial gains. Let's be real. Most people flock to crypto to make it big, and they want to make it fast. There's a growing awareness that we can't solely rely on the traditional system for our retirement. The value of money is slowly dwindling over time, and trust in the system is waning. Stashing your cash in a savings account? Not the wisest move. They barely keep pace with inflation, so you're basically losing money. Investing is no longer just an option, it's a necessity. Now, you might wonder what to invest in. You could go for rare art, real estate, stocks, bonds, or for the adventurous souls, there's Bitcoin and cryptocurrencies. Ultimately, your goal is to pick something that not only beats inflation, but potentially lines your pockets with good profits. Investing, at its core, involves putting your money into an asset that yields returns through selling that asset or dividends. The next question that probably pops up in your mind is, how much do I need to get started? The good news is, there's no need to break the bank. You can start with as little as $100. The key is to begin at your comfort level, learn the ropes, and familiarize yourself with this asset class before committing large sums. I get it. The temptation to go all in with crypto can be overwhelming. But resist the urge. Take your time, do your homework, and assess your personal finances, portfolio size, and risk tolerance. The golden rule here is never to invest more than you can afford to lose. Always ask yourself, if my wallet got hacked tomorrow, would I be okay? If the answer is a resounding no, you might be investing too much. So, proceed wisely. Now, let's talk about the burning question of when and how often to buy crypto. For many investors, a hands-off, passive approach is the way to go. Picture this. Setting up an automatic purchase of $100 worth of Bitcoin every Friday, like clockwork. It's called dollar cost averaging, and it's all about thinking long-term. This strategy allows you to steadily accumulate assets, rain or shine, without getting caught up in the day-to-day crypto roller coaster. But let's say you've got a bigger sum and want to dive in head first. When's the right time to go all in? While it's not the recommended route, some daring souls might go this way. The golden moment is when the markets are in the doldrums, prices have taken a nosedive, and fear is rampant. This is when everyone's shouting that crypto is a scam, and it's heading to zero. You could also keep an eye on key technical indicators like the RSI, looking for oversold signals to pinpoint good entry points. On the flip side, avoid splurging when prices are sky high at new all-time highs, with gains soaring by hundreds or even thousands of %. It's a treacherous time to buy when greed is in the air and people start flaunting their Rolexes and new cars. These are the danger signs. When the media is hyping crypto as the holy grail of money, that's the riskiest and least rewarding time to jump in. So, be cautious and mindful of this reality because unfortunately, that's precisely when most people are tempted to dive into the cryptocurrency markets. Stay sharp, crypto enthusiasts. Before we continue, just a quick reminder. Don't forget to hit that like button, subscribe for a regular dose of enlightening content, and ensure those notifications are turned on. so you're always in the loop about our latest videos. Now, let's dive into the crucial question of how much of your portfolio should be allocated to crypto. It's a decision that's as personal as your choice of a favorite crypto, and there's no magic number we can throw your way. We can't say it should be 3% or 10%, as that truly depends on your individual circumstances. However, some intriguing studies have unveiled that just dedicating 1% of your total portfolio to Bitcoin can lead to some jaw-dropping outperformance compared to conventional 60-40 stock and bond portfolios. Imagine having a 59-40 mix of stocks and bonds, and then that 1% dash of Bitcoin. That could be the golden formula. But here's the twist. There are some investors, often younger folks, aiming to hit it big. They go all in, putting 100% of their investments into crypto. Why? Because crypto is viewed by many as the express lane to wealth. However, it's wise to diversify your profits out of crypto into assets like stocks and precious metals. It's essential to remember that crypto plays in the big leagues of risk and volatility. Allocate too much, and you're exposing yourself to significant risks. On the flip side, having zero exposure could see you missing out big time compared to those who do hold crypto. Now, it's time to unravel the essence of crypto. Many folks stumble on this one. You see, crypto is like magic internet money. It's not tangible like a piece of art or a physical house. These are intangible assets you can't lay your hands on. Plus, crypto assets don't give you ownership rights over protocols. They're not stocks. Owning stocks comes with legal rights, whereas crypto assets don't grant you such privileges. Keep in mind that how crypto assets are treated for tax purposes can differ significantly from traditional assets, so be prepared for that tax bill. Different cryptos have different functions. Bitcoin, for instance, serves as a monetary device transacted on one of the world's most secure computer networks. Other networks, such as Litecoin, Dogecoin, and Monero, also serve as transactional payment currencies. Then, there's Ethereum, a powerhouse that functions as a programmable supercomputer operating system. It has a native token, ETH, used for various network operations and gas fees. Ethereum is also the launchpad for thousands of other tokens, much like Solana, Matic, and Cardano. And then, there are tokens. Think of them as startup companies built on blockchain networks. They vary in their degree of decentralization. These tokens, launched on platforms like Ethereum, aim to serve specific use cases within various platforms and ecosystems. Tokens can have unique features, like burning mechanisms, as seen with MakerDAO's MKR token, or they can be required to pay for network operations and services within an ecosystem, as is the case with Chainlink's Link token. The success of these tokens hinges on a variety of factors, from hype and user adoption to the strength of their teams and strategic partnerships. All right, folks, let's tackle the million-dollar question. What should I buy? It's time to break this down into a few distinct categories. First in the spotlight is the legendary Bitcoin, sitting in a category all its own. This OG crypto needs no introduction. It's the granddaddy of them all. When you think of Bitcoin, envision digital gold. It's as simple as that. If you're a casual investor dipping your toes into the crypto waters, this is where you start. It's like taking a little sip to get a taste of the crypto world. Keeping it simple, just buy Bitcoin. It's super easy. And here's the deal. Bitcoin usually leads the crypto markets, and it's often viewed as a safe bet. While the returns might not have you doing backflips, the risks are more manageable. But here's the kicker. Don't set your expectations on some wild million-x gains from Bitcoin. That ship has sailed. It's already the 10th biggest asset globally, with gold reigning as number 1, by the way. So, while we're all about investing in BTC, let's also be realistic. The returns won't send you to the moon and back, but hey, it's a steady, dependable choice for those looking to keep it simple in the crypto game. All right, let's shift gears and delve into the fascinating world of Ethereum, the number 2 cryptocurrency globally. Some folks argue it should be number 1, but that's a debate for another day. When you buy and hold Ethereum, you're essentially getting exposure to everything that's been constructed on top of it. Picture it as a vast ecosystem where Ethereum serves as the financial heartbeat. As these various protocols, tokens, and whatnot thrive on Ethereum, the value of Ethereum itself skyrockets. It's like the epicenter of decentralized finance, NFTs, stablecoins, layer 2s, gaming, gambling, metaverse, AI, big data, oracles, and a whole lot more. Plus, here's the kicker. Ethereum boasts a built-in burning mechanism, a perpetual stock buyback system that gradually reduces its supply over time. And if that's not enticing enough, you can stake Ethereum and watch your investment blossom with sweet yearly returns. Most newcomers to the crypto scene would do well with a 50-50 split between Bitcoin and Ethereum. Why? Because it grants you a substantial slice of the entire crypto pie. These two juggernauts together make up roughly 65% of the entire crypto market cap. It's almost like having your very own crypto index fund. And here's a bonus. Both Bitcoin and Ethereum are increasingly getting the green light for various financial products. We're talking about stock-traded products like ETFs specifically designed for these cryptocurrencies. So, depending on where you're located, you might even have the option to snag a BTC ETF or Ethereum ETF through your brokerage account. It's like crypto going mainstream, folks. That's it for now. If you enjoyed today's content, show your support with a like, leave a comment, and hit that subscribe button. Feel free to share your questions, thoughts, and suggestions in the comments section. Together, let's build a community where curiosity and wisdom are freely exchanged and nurtured. Until next time, and remember the future of finance is here with Key to Crypto or KTC.